So you say that there are now sort of two camps within mega camps. There are those companies such as Microsoft, as you point out, that have earned their high valuations, and there are those companies that have not, which you point out as Netflix and Amazon. Walk us through your case.
Yeah, I wouldn't say that companies haven't earned it. What I would say is over the last 5 years, we've been in a very growth conducive economy. Interest rates being so low has been very favorable to companies where the revenue growth and the growth in their earnings is on the come and is in the future. And if you step back now among the mega caps, it's been really easy to combine all of them. And you'd say there's 6 or 7 of those. And it's pretty easy to look at several that have kind of 30-ish PEs that, while seem high relative to the market, can seem justifiable given the cash flows and profit margins of these companies. And then you have companies trading at 50 to 150 times earnings, depending on what year you're looking at. And those companies are going to be a lot more sensitive if we're worried about interest rates rising, if we start to move more towards value than growth.
And I suppose the argument would be from investors who like some of those names, right, is that Amazon and Netflix are growing faster than a company like Microsoft.
Yeah, no doubt. Admittedly, those companies are growing faster than a company like Microsoft, companies like Apple and Google. And so it's simply a matter of what's the right valuation and where are investors as a whole putting their priorities.
Right. And speaking of priorities, of course, everyone thinking about interest rates rising next year, how much, how quickly. You appear not as fearful, Greg, that interest rates will rise as steeply. Walk me through that.
Yeah, I think in terms of at least one opinion is looking at the current data, I think there's a lot of data that supports the fact that inflation at an incredibly high level is likely peaking. So from here, we enter disinflation. And in a period of disinflation, we can hopefully enter a period that, investors have come to know as Goldilocks, where if inflation retreats enough, the Fed won't be as pressed to move as fast as maybe some believe that they will. I do believe interest rates will go higher, but I think if you look at the bond market has really done nothing since Powell opened his mouth, and in a lot of ways is saying that interest rates might not move as fast as we think.
Let's talk about some specific names that you like. We showed it a little bit earlier in the segment. You like O'Reilly, and you say that this is a name that should do well no matter the environment next year.
Yeah, I think, we just made a lot of big statements about interest rates and the direction of inflation and the like. At the end of the day, we're here to try to compound wealth. And a name like O'Reilly, we're really trying to avoid a big macro call and, in essence, find a company that can do well regardless if the macro environment isn't dependent on the direction of interest rates. It's a company that's grown well in good and bad economies. And most importantly, I think right now they have the benefit of the scarcity of new vehicles out there. I think that's a common understood event within the economy is that new vehicles are very hard to come by. So people are going to hold on to their cars longer. They have a phenomenal business and business model.
And up about 50% year to date. You think they can sustain that level of performance next year, or it sort of scales back a little bit?
I would think it would scale back. Another 50% would be great.
And then finally,
I'm not predicting that.
Yeah, let's see. We sure will be watching. Finally, what are your concerns heading into 2022?
I think getting back to that, hopeful Goldilocks scenario, the only thing that could really ruin that would be the Federal Reserve making a policy mistake. And what I mean by that is if there's signs that the economy is slowing and yet the Fed goes forth with its mission to raise rates 3 times, that could prove to be a mistake that would be painful and that, in essence, always creates a little bit of a ripple in the stock market.